Hey, my name is Ed. Just a question before I start. Who is active in energy industry? Hands up, please. 1, 2, 3. Yeah, that's exactly the reason of the existence of this startup. Nobody is, and the goal that we have is actually to enable this economy between everyone. Actually, it's connecting us already, but we don't have any economy around it. I'm one of the founders of the Energy Web Foundation, so that's what I spent my last 3 years on. It's one of the largest energy blockchain consortia out there with 110 affiliates, maybe a third large corporations, a third startups, and a third investors. But what I want to speak about today is actually what we have been secretly working on all the time in Grid Singularity, which is one of the founder of the foundation. I think I have to put this a bit, since you're not active in energy, I have to put this a bit in a context. And so usually you have to start to explain a bit of energy, but I will keep this very short. And energy is actually, humanity has a very strange relationship with energy. At first we had it, we had the power of it, it was fire, everyone had it, Then industrialization, it was taken away from us. It was a very small group of people, actually governments controlling it. And then in the recent 10 years, we actually got it back again. We got it back again because technology scaled and it has become cheaper now actually to produce electricity at your home. Now, to put this a bit in a different context and underline with numbers is let's look at the investments that happened in energy. So in 2017, the utility industry or the energy market invested roughly 700 billion in the energy market. And in 2019, so the expected number for the, let's say, final consumers, what they invest in energy is 140 billion. If you look at the forecast until 2030, so in the next 10 years, it's predicted that final consumers will invest up to 2 trillion into this market, whereas the utilities are investing rather less than what they did in 2017. And you can already see that in all the auctions that are happening around building new power plants and so forth. In the last year, it basically went against zero. There is hardly any new wind power plant deployed, simply because the economics don't fit anymore. And now, if you look at these numbers, like, okay, now we can expect a lot of investments here. The question is why? So let's look at the relationship that everyone has actually with electricity. And for the traditional industry, it's very clear, the relationship. Everything that happened here, I worked in this industry 15 years. Everything you do is based on return on investment. Every decision you make is based on return on investment. And for final consumers, what is the relationship? It's nothing. Anyone who I ask, what is your relationship with electricity? Yeah, it's just a pain in the ass. It's an invoice, at the end of the month. In developed countries, it's 2% of our GDP per capita. In undeveloped countries, it goes up to 30–40%. But you don't have any relationship. You don't have any return on investment, nothing, because you don't have access to the market. Now, the real fight that is happening in the background, and this is a very important chart that is shown way too little, is the x-axis is the profit on energy, and the y is the profits on data. Now, the biggest fight that is happening there, and every utility, every energy company has this fear that they will be made obsolete by the FANGs, because the FANGs can afford to make losses on energy because they still make more profit on data. And the utilities are here. But so utilities are facing a situation where in the next 5 to 10 years, they have to become IT companies to compete against this potential threat. Now you can build your own opinion. Which scenario do you want, right? You want this scenario or somewhere in between? This is the curve that is kind of, well, if you ask me personally, and that's kind of what the whole team stands behind, kind of this opinion is, we don't want that, the FANGs. I don't want Alexa and Siri know everything and resell my data and even maybe subsidize me on electricity. So let's look at innovation space. You know, actually the first startups in energy just popped up 15 years ago, maybe 12 years ago. So it's a very young space that just started to open up. And the inertia in this industry is very big. So it's a highly difficult market. It's a very local market, different regulation in every country and so forth. So you need to have a lot of know-how and a lot of money to start a startup there. And this is kind of breaking up right now. So when we started Energy Web Foundation, and it actually, the whole wave launched with a presentation at the MIT Media Lab in 2014. 2 startups, 3 startups. We made a first event, Event Horizon in Vienna. We had, I think, 30 startup applications. Second event, 250 startup applications a year ago. Last event, it already started to go down because there was a kind of a cleaning out process in the industry. Now we have roughly 150 energy blockchain startups around the globe. And majority is kind of working on peer-to-peer. And so this is kind of how what kind of business models they work on. Now, the interesting thing is, majority of these are working on exchanges, on internal exchanges, not external exchanges. So even in peer-to-peer, there is a couple of use cases deployed. The problem that I have with this, and I'm talking a lot with those teams, is nothing is open source. Nothing. Zero. And people are not really participating in the market. It's a kind of they set the prices. There is no free market yet at all. And so let's look at the exchanges in the industry. It's the same story. There is globally 33 exchanges that allow for third-party strategies. Anyone can participate. Well, anyone needs 1 million in bank account, which you put as a deposit on the exchange. And the markets are enormously complex. I mean, they all roughly go the same. You trade into the future, to tomorrow and so forth. But then there's a huge derivative market as well. And this is kind of the open market, kind of the free market, unregulated market. But then we also have other markets, which is kind of operated by the grid operator. Those markets are there to source flexibilities to stabilize the grid, to stabilize frequency. And the entry barriers are enormously high. The entry barriers are so high that we have in Germany 250 energy traders, not more. We have 88 million people here. Now, if I look at this scenario, we're going to expect so many investments here, and the smallest product that you can charge on the smallest exchange there is 100 times the volume that a house consumes. So meaning you have to, how do you participate in this market? It's not possible. Meaning in Germany we have 1.5 million solar power plants, this size. They're all getting out of feed-in tariff in the next 2 years. No market. So meaning there is a huge wave coming, a huge business opportunity coming to aggregators. So looking at this scenario, we set ourselves the requirements. Maybe a step back. Looking at this, we believe there will be millions of exchanges in the future, local markets. And then we made the requirements ourselves. How can we build an exchange that enables the grid source flexibilities to stabilize the grid, the open market participate, but also the regulator, because the regulator has an important task. It's observing if there is no kind of Enron scenarios, kind of blackouts, and to push the prices and so forth. So now if you look at the scenario, you want to create an exchange where all these regulated entities and non-regulated are participating. There is only one chance. The only thing that can operate such thing is a smart contract. Otherwise, somebody would own the exchange. And that's kind of the biggest problem also in the energy market. These guys don't trust these guys. They don't trust each other at all. So the question right now is my platform, my platform, my platform. Join on my platform. And nobody's joining any platform. Therefore, the only solution is smart contract. Now, this is the requirements we set ourselves. Open, arbitrary small products, clearing tied to physical delivery. We don't care about derivatives or trading into the future too far and so forth. Open source, extensible. And the architecture is quite simple. You have physical devices. If you go to Saturn Media Markt, you want to buy an appliance, everything has an API. Everything. So you have a physical asset. You can build an agent. 60% of fintech is running on robots, on trading bots. So you can do exactly the same here. If you have an invoice of $100 per month, you won't be trading yourself. You will have someone else trading for yourself, an algorithm. So you have asset agents and you have virtual agents. I will show what they do actually. And then we have markets. Now, we created the markets in a way that you can make different exchanges in a market. So the most simple one is a spot market, because electricity is continuous trade. So you have slots. You can define yourself, is it 15-minute slot or 5-minute slots and so forth, so you trade in the future. If you have enough flexibility, you can add another balancing market, where a virtual agent would act as a market maker, buy specific capacity. If the frequency goes down, is balancing out. You could create any type of other market that you exchange in this market. So there is a VAR market, so this may be more too technical. Most important is, are you pre-qualified? Registries. Can the agents, can the devices really hold the promise that they have traded? Can they react, and so forth? The other important thing is, if my community has one of those exchanges and there is a grid operator, or a regulator, how can I enable them participating in this market? So, and this is why smart contracts are very important, so that the transmission system operator who wants to stabilize his grid can enter the market, can actually create their own balancing market inside this market and participate with prices. So it's kind of abstracting the competition from my platform into price. I give this price for this flexibility. And this platform is not owned by anyone. Another important thing in structuring such an exchange is it should be able to emulate the structure of the grid. And the grid is very simple. You have high voltage for long distance, then you go down in voltage, you have distribution. And so it looks pretty much like this. Yeah? So you can actually place a market on every substation. In each market, you can put a lump sum for each trade that is going there to account for the specific grid. And so, of course, there might be markets where there is no flexibility, so they only have a spot market. There might be a market, there is flexibility, so you have another balancing market. And they join again in the higher market in another grid, because the grid might be owned by someone else. Now, if you look at this structure, it automatically appears it's rarely that these guys will trade with these guys if they have own supply, because they have to pay more for the grid. And that's normal economics. If I use more copper to take from somewhere else, you pay more, right? So it will automatically become more profitable to trade locally. So we built an exchange engine. And it's very simple. Before you deploy something like this, you need to know, where do the prices go? You don't just deploy this and let's figure out. We have no idea where it's going to go. So we built a simulation environment. So you can go in there, d3a.io right now, set up your community, set up all the houses inside. There is a lot of templates. Kind of strategies and so forth. The library is being built out right now. You can simulate. You can see how the prices would develop. And at the end, the goal is you just download it and install it yourself, if you want. Now, let me show you how it actually runs. So I wanted to make a demo, but I thought if I do it in double speed, it's faster. So I'm setting up my own grid now. And here in the... what I'm showing here is basically... I'm not showing anything. I'm setting up my own grid. This is the simulation. And unbelievable, I can't stop it. Okay. Yeah, it doesn't matter. So here you set the what kind of market structures do you have? What kind of slots? How many slots into the future? Everything is very modular. A round thing is a market itself. And now I built two exchanges below each other. One exchange is actually in my home because I have a smart home. So I put a template storage inside, a PV, and actually every time I add something inside, you can actually add your own trading strategy yourself. So it's completely open on all sides, open source. You can, if you're a data scientist, just take the simulation, show us if you can make a better trading strategy. And so this is a multi-party house. I put a PV inside there, and then a standard load profile. I multiply it time, I don't know how many flats I put inside. I made the PV a bit bigger. And you can actually share, you can let your neighbor add their house themselves. And I put an infinite power plant inside and call them Vattenfall. So it's basically an API to Vattenfall. They could feed in, they could also trade in there. I start the simulation, and I can see exactly who is trading with who, at what prices. There is a market maker, which is Vattenfall usually. They can cover everything. And here I go into each different level, and I can see what is actually the return on investment of each different device. And this is what could change the whole perception that we have about electricity. Everything that I might buy in future, if it can participate, it gets a return on investment curve. If I buy an electric vehicle with 100 kilowatt capacity, 100 kilowatt capacity is enough to feed my home for a whole week. If you make some simple calculations, you can get to return on investment curves for your car 4 to 7 years. You will buy an electric car not because of the reason it's so fancy, because you will make money with it. Not only the car, everything that is flexible can get a return on investment curve. We come from crypto, so everything open, you can do whatever you want. So we have a lot of hardware partners that are embedding the clients. We have a lot of data scientists actually now starting to grow. Next month we have a release where we want to enable collaboration. So we're now rolling out the APIs. We're currently in developer beta. And we hope that by the end of the year it's possible that you can actually deploy your own exchange. Now there is a big caveat. We're still looking for someone who can make kind of a regulatory API, because there is still like the regulation. But if one of you guys happen to have a balancing group, here you can enable a community. The business models that actually can be enabled through such an exchange, which you can build up very fast, and you can model it very fast. So you get all the criteria, you get all the argumentation up front in your hand to go to the community. Look, this is how your invoices would develop. This is how everything in your house that is flexible could get a return on investment curve. But before we go there, because decentralization is very difficult for humanity, I think there will be a lot of steps happening before. So the whole code base that we built right now is open source on GitHub, but it's actually compiling the exchange into Python. So it has nothing to do with blockchain yet, because it's too early time-wise. And now there is what you can do right now is you can actually, if you're a utility energy market participant and you want to enable a community somewhere, you can build the exchange right now. And if you're a community, you can do it yourself if you have at least one knowledgeable thing. We have made it already much easier to understand the energy markets through this, because you can simulate it. But if it comes to the TSOs and DSOs, and they see that these communities are starting to develop, and they want to participate in this market to source, they will not trust you. And that's the point where you have to put the closed thing onto the smart contract on a chain. Because then you need to put the trust, you as an operator of this exchange, away to enable the whole grid operate like this. And anyways, we have a POA chain in Energy Web Foundation. We deployed it a couple of times as a smart contract on POA chain. It's a chain hammer. So we have to wait until the cost of transactions, or let's say the cost of trust, goes down so much that we can deploy a lot of decentralized exchanges. And this is Polkadot 2.0. This is the hierarchical structure. And we're having a lot of discussions there. We're showing this is where we look at. The whole energy market could run on this, but we need Polkadot 2.0. For vendors, we had a lot of interesting discussions with, say, Bosch and Siemens. They're making a lot of appliances and everything has an API. There is an interesting business model for them, because they could actually sell the appliances together with a strategy and actually participate in the device in the future. Regulators can look into it, DSOs, congestion management, but the most interesting is data scientists. And the data is fairly simple, it's always the same. It's very simple time series. Put predictions in there from the weather. I think for data scientists this is enormously interesting, specifically because it's open. If you build the best strategy, put it here. because there's other clients which will deploy it. And I believe this is exactly the transformation that will happen in the energy market, that utilities are facing. They have to, obstructing their business model means their strategies will become digital. So please join us. We're looking for Rust developers because now, as we say, facing the launch of Polkadot, we have to look into the architecture. How can we deploy it? And you know, the energy market is moving very slow, so we still have a couple of years until they accept that, you know, instead of mistrusting each other, we can put it on the chain. And then, of course, we have those kind of three ecosystems that we're trying to nurture and develop is data scientists, strategies. Put it here. Let's compete on it. Build wallets. Something that is connecting to the strategy, but kind of reflecting the humanity's need. This is a complete other task. You know, how do you actually interact with it? And we believe it will be chatbots, where you basically say like, I want to wash my clothes now, and it says, well, it would cost you $1. If you put it in the night, it costs you 20 cents. So, you know, there needs some constant interaction where an intelligence, your concierge, your agent, whatever, is discussing with you and helping you to optimize your action. And we're developing one of the largest hackathons in the energy market. It will be at the Odyssey hackathon in Groningen next year. And what we plan to do there is we will build a digital twin of a large community, put a year simulation, compress it into 2 days, all the APIs. If you're a data scientist, if you're a hacker, come there, you can log in, and there will be bounties who makes the best strategies. A live hacking on an energy market. Thank you very much.